tech really has been leading this year, particularly large cap tech. The real standout there, I think, has been Amazon. It's up by about 40% thus far this year. I want to bring in someone to talk about that phenomenon. That is Tom Forte, D.A. Davidson, Senior Research Analyst. He's joining us from New York. Tom, it's good to see you. I hope you're well. So we have seen this preponderance of tech performance. And what's kind of interesting about that is how not unusual it is. In other words, that was really the narrative over the past several years, right? Everyone kept sort of talking about how a lot of the market rally was from these large cap tech names. And even amidst a pandemic and all of this turmoil, that still remains the case. Do you think it's going to remain the case?
Well, I think the argument in big tech for Amazon is a very strong one. I think it's a little trickier for Google and Facebook, which rely on more economically sensitive digital advertising revenue. But if you think about COVID-19, it has really taken the secular shift of e-commerce and injected it with growth hormone. And you could say the same thing for Amazon stock. So this really put a lot of growth into Amazon. And you see it in not only the April sales data for e-commerce, but now the May sales data for e-commerce. So again, I think it's trickier for ad-based business models like Google and Facebook, but e-commerce names like Amazon, COVID-19 has clearly benefited their sales.
Tom, it's Adam. Good to see you. But won't that, when you talk about the tricky ad market for Facebook and for, say, Alphabet, won't that, not in the too far future, begin to come back as we either learn to live with this virus or we get the vaccine, and ad dollars will have to come back at some point?
So I think I closely monitor Roku. And the question is, can a high growth area within advertising, being OTT advertising, continue to grow? And there was a data point today that suggested now projections for even OTT ad revenue in 2020 are going to be slightly negative. So I think that, Adam, part of what you're talking about is, are we going to experience a V-shaped recovery? Today's Census Bureau data for retail sales certainly would suggest that. I've closely been monitoring the throughput for TSA for travel and seated dining for open table. And while you've seen TSA throughput 400% higher off a mid-April bottom, it's still down something like 80% on a year-over-year basis. And you've also seen improvement in open table, but you're still looking at like 65% decline on a year-over-year basis. So yes, in a V-shaped recovery, advertising should certainly recover, but it isn't clear to me yet that we're in a V-shaped recovery.
And Tom, we've got Paul Schatz with us here from Heritage Capital. I think he wants to jump in with a question for you.
Sure. Hi, Tom. So given the last recession was, 12 years ago, and the whole ad landscape has changed from kind of traditional media to online, how do you model what is happening now and into a recovery versus what happened in the past when it was more traditional?
Yep, so our general view for modeling a recovery is as follows. We think the June quarter will be the weakest. The September quarter will show signs of improvement, but the first half of the September quarter will be very weak. And then December will be further improvement. And next year will be better than December, but lower than our original expectation. Now, within advertising, I think what you're seeing is, for example, Pinterest reported 8% decline in revenue in the month of April. Facebook indicated revenue in April was flat. Google indicated they still had pressure. So I think that's the basic trend we're expecting, the June quarter to be the weakest, September to still be bad, but to be better, and then moderating improvement from there. But I do think the June quarter will be negative.
Tom Forte, got to leave it there. Good to see you, Tom. D.A. Davidson, Senior Research Analyst, talking to us about what's going on in tech right now.